Lawyers for investors accusing several major banks of conspiring to rig silver prices are seeking to revive the case, saying they now have smoking gun evidence they obtained from Deutsche Bank following a settlement. The newly cited evidence was produced by Deutsche Bank after it reached a $38 million settlement in the case earlier this year. The plaintiffs said the evidence shows the defendants, which include various banks, engaged in collusive price manipulation. Joining us today in studio to talk about this is Frank Holmes, CEO of U.S. Global Investors. Frank, good to have you back in studio.
And it's good to be in New York with you.
So, big news hitting the industry here today, Frank. What's your take?
Vindication. I think that also the big settlement for the gold allegations that were $60 million that Deutsche Bank recently paid. And I think that that just is going to cleanse this marketplace, that a lot of people have complained about this thought process of conspiracy, that they were manipulating price. And we saw it earlier this year in October when China was not in, they had shut down for holidays, and they're the biggest gold buyer, and all of a sudden gold starts unraveling, and it didn't take much money. $1 million could turn around and sell $25 million worth of gold, and you would hit these stop losses, and then they create this what's called cascading, then they buy back cheaper. But people are so bruised by that, it starts unraveling.
And Frank, you know, you're a major player in the gold and silver space here. So how do you see it personally? Like, does news like this, rattle your confidence in the system?
It doesn't rattle my confidence in the system, but it's very disturbing that because of the leverage of a 1% move down in gold or silver translates into a 3 to 5% move in the gold stocks. So it really hurt the gold equities, and that's what we manage, our gold stocks and silver stocks in our portfolio. So that was the tragic part. But I've always said that when you look at gold, it is the fourth most liquid asset class in the world, and it is money. It's a monetary asset. And so naturally, if government central banks are involved in manipulating interest rates to try to have monetary stimulus, then gold is part of that process. They can do it indirectly, or they can use these big money-centered banks. Or then you can have the rogue traders at these big money-centered banks that know how to say, we're the stop lossers, and knock it down. I think that that is unsettling, but this is positive. This is good news.
All right, and looking at gold today, post-ECB, struggling here, on the news that the ECB might be ready to taper here come April. How do you see gold playing out here, Frank?
Well, I think that gold is going to rally in those countries' currencies that have the highest negative real interest rates. So that's really important to be tracking right now. When you look at this whole issue on Trump going after the unions of carrier and saying that they mismanaged what they're doing and they should cut their dues, but if you look at the pricing mechanism, we could have a 10% hike in buying their products. So if we bring everything back to America, you could experience a 10% inflationary rate. Well, what would that do to the price of gold? Because I believe that would have a huge, massive move in the price of gold, because if interest rates short-term were to go to 12%,
right,
it's the no economy.
Right. Frank, good thoughts from you today. Thanks for joining us in studio. And thanks for watching our coverage. We'll have more for you, so be sure to stay tuned.